Rock bottom isn't the end of a trader's story. It's the only place you can rebuild a mind strong, enough to survive the next bull and the next panic. The first time I read Jesse Livermore's account of losing it all, I expected excuses, bad luck, crooked markets, a villain to blame. I found none. What I found was a man staring into a mirror sharper than any ticker. The realization that ruin is not a financial event so much as a psychological reckoning. I remember closing the book and feeling the air in the room change. Because here's the truth we avoid until the chart forces us to face it. The market can take your money, but only you can decide what happens to your identity afterward. And that's the space where Livermore rebuilt himself, silently, methodically, without theatrics. I want to take you into that quiet room with him. Not the headlines, not the legend, just the operator after the crowd has left, when the statement reads zeros and the pride is louder than the pain. He didn't sprint back to the screen. He didn't stack leverage to avenge his name. He did what almost no trader has the nerve to do. He stopped. He stepped away to recover something more valuable than capital: clarity. The man who once read the tape for a world now read his own behavior line by line, asking simple, devastating questions. Where did I need to be right? Where did I turn a stop into a suggestion? Where did I add to a loser because my ego demanded a comeback story? Livermore's philosophy sharpened precisely here. He separated money from method, method from mindset. Capital would return only if clarity returned first. So he rebuilt the only three pillars that matter: conditions, confirmation, and control. Conditions: is the market environment forgiving, neutral, or ruthless? Confirmation: does price prove my thesis before I size, or am I begging it to? Control: do I have rules that act when stress tries to act for me? Daily loss limits, time stops, a ban on averaging down, and the humility to call cash a position? These weren't slogans on a wall. They were seatbelts he agreed to wear while calm so he wouldn't unbuckle them while scared. What astonishes me is how modern this feels. We live in an age of alerts and dopamine, where silence feels like failure and speed impersonates skill. Livermore knew better a century ago. Recovery begins not with the next trade, but with the next ritual. He rebuilt mornings, reading the general market before touching a single idea, studying leaders before he dared touch laggards, putting a small scout on instead of a statement, and letting the market fund his aggression instead of his pride. He turned starting over from a drama into a sequence. So when I think about starting over after losing it all, I don't imagine a triumphant anthem. I hear a metronome: proof before conviction, scout before soldiers, stops at disproof, not discomfort. Add only from profits, cap daily damage, police correlation, and review process even when green so success doesn't launder bad habits. Starting over is not about trading again. It's about relearning how to deserve to trade again. This is the frame for our story: how a man who fell from the top floor of Wall Street stood up without bitterness, rebuilt without noise, and returned with a rule set strong enough to carry both fortune and failure. From here, we step into the paradox at the heart of every comeback: the inner civil war between urgency and patience, between the hunger to recover and the discipline to wait until the market invites you back. If you had to rebuild after a wipeout, what would you restore first? Your capital, your confidence, or your rules? Tell me below. I'm reading every answer. The inner conflict or market paradox starting over doesn't just mean a smaller account. It means a louder mind. The morning after ruin, I felt two equal and opposite forces take the same chair. One voice said, "Trade now. Recover before the market forgets you." The other said, "Don't touch a key until the tape proves it deserves your risk." Both claimed to be protecting me. The first promised dignity through action. The second promised survival through restraint. This is the paradox at the core of every comeback: the urgency to repair identity versus the patience required to rebuild edge. Livermore described this as the operator's split, ambition and caution trading the same account. He never tried to silence either one. He assigned them roles. Ambition's job was to expand only after proof. Caution's job was to defend until proof. When I let them swap jobs, even for an hour, the old story replayed. Anticipation instead of confirmation. Averaging instead of admitting. Improvisation instead of sequence. The lesson was brutal and simple. Recovery collapses the moment I ask a trade to fix a feeling. Ruin also distorts time. Before the drawdown, I thought in series: 10 trades, a month, 100 qualified signals. Afterward, I thought in single candles. I felt an ache to end the story quickly, to write one trade large enough to bury the embarrassment. Livermore's notebooks read like a conversation with that ache. He returned his mind to distribution thinking. Edge is a property of many trials, not a single spectacular one. So he forced structure on time, fixed trial counts before any system change, daily loss limits that protected cognition, and scheduled review blocks where he audited process independent of P&L. The market took his money. He would not let it take his sequence. There is another layer to the paradox. The better my read of conditions, the more dangerous my confidence becomes. After Wipeout, I over-recognized familiar patterns and under-respected new regimes. Livermore solved that with a pre-commitment that insults ego and flatters math. Scout first. First unit is information, not income. If behavior agrees, reclaim and hold, sponsored pullbacks, range shift, only then may size arrive, and only from market-paid progress. If behavior disagrees, the cost is tuition, not identity. This simple choreography lets ambition live inside restraint. It keeps me from proving I'm right when price is proving I'm wrong. Correlation turns the paradox into a trap. 5 new starts across correlated names are one oversized bet in disguise. Livermore diversified by character, leaders versus laggards, cyclicals versus defensives, momentum versus mean reversion, so one macro shove couldn't erase a careful week. In practice, that meant cutting simultaneous attempts, refusing to pyramid across lookalikes, and measuring exposure by factor, not ticker. The account can't afford symbolic activity, only asymmetric opportunities earned by evidence. And then there's silence. After ruin, silence feels accusatory. Each minute flat feels like failure. Livermore rebranded it as inventory. Cash became a position. Observation became work. He sat out entire sessions, not to avoid risk, but to rebuild rhythm. When I adopted that stance, the paradox softened. The part of me that wanted action learned to channel energy into preparation, marking levels, pre-writing disproof, defining time stops, so that when action finally arrived, it was execution, not therapy. This is the balance I live by now. Caution drives until the road is paved. Ambition accelerates only once the pavement holds. The paradox never disappears, but the sequence decides who gets the wheel. From here, the real enemy comes into focus, not the split itself, but the mental shortcuts that widen it, the psychological traps that smuggle ego back into the cockpit under the names of conviction, intuition, and giving it room. The first hours after a wipeout felt like walking through a house where every light switch sparked. I could still quote my rules, yet each one suddenly sounded negotiable. That is the true core problem after losing it all. Not ignorance, but permission. The mind starts granting itself exceptions that feel reasonable and end up fatal. I caught myself renaming behaviors to make them survivable. Averaging down became improving basis. Moving a stop became giving it room. Holding a stale trade became letting the story play out. None of those phrases described information. They described emotion. Livermore warned that the operator's first foe is narrative. After ruin, my brain craved a story that made me the comeback protagonist. Stories are comforting. Markets are indifferent. The most expensive trades I've ever taken began as scenes in my head, how it would feel to nail the turn, how it would sound to say, I was early, not wrong. That sentence has emptied more accounts than bad research ever did. Early without proof is just wrong with better vocabulary. Then comes time distortion. Before the collapse, I thought in series, sets of 10, 30, 100 qualified attempts. After it, I thought in single candles. Every tick felt like a referendum on worth. That compression pushes me toward revenge size. If I can win big now, the story is fixed. Livermore's cure was arithmetic, not pep talk. He forced expectancy back into view. One trade cannot fix a distribution. It can only distort it. The solution wasn't a bigger trade. It was a smaller trial inside a larger count. Another trap is method drift. Pain makes the familiar feel guilty. I looked at my plan and thought, maybe the market changed. Maybe I need more indicators, a different time frame, new instruments. Sometimes regimes do change, but pain is a poor analyst. Livermore used fixed trial counts to decide when change was warranted. Only after a set number of fully qualified trades would he review parameters. That guardrail prevented variance from masquerading as failure, and prevented boredom from masquerading as innovation. There is also identity attachment. I didn't want to exit a loser because exiting meant admitting that the market, not my read, was the final authority. Livermore separated belief from behavior with one line: the market confirms or it does not. If it does not, my belief is a private hobby, not a tradable thesis. He put the stop where the idea dies, not where my discomfort temporarily declines. Every time I honored that location, I paid tuition. Every time I moved it, I paid rent on denial. Correlation blindness sneaks in too. Starting over tempts me to diversify across symbols that rhyme, 5 tech names, 3 minors, 2 momentum plays that live on the same factor. The screen looks busy. The risk is singular. Livermore diversified by character, leaders versus laggards, cyclicals versus defensives, momentum versus mean. So one macro shove couldn't erase a careful week. After ruin, I made that a written rule. Exposure is capped by factor, not by the number of tickers. The last trap is boredom avoidance. Flat feels like failure after a blow-up, so I stayed engaged to feel alive. But the market doesn't pay engagement. It pays alignment. Livermore turned cash into strategy. Being flat wasn't absence. It was inventory, time, attention, and optionality for when proof finally appeared. Rebranding stillness as work changed everything. Preparation, levels, triggers, disproof, and time stops became the way to channel the energy that used to become random trades. When I list these traps, narrative, time distortion, method drift, identity attachment, correlation blindness, boredom avoidance, I see the same blueprint of failure, the self trying to manage feelings with market activity. Livermore's antidote was structural, pre-commitment that survives emotion. Scout first, add only from progress, stops at disproof. Pair price stops with time stops. Daily loss limit that protects cognition before capital. Fixed trial counts. Journal process separate from P&L so green days don't launder bad behavior. With those guardrails named, the next step is to step out of my head and into Livermore's lens entirely, how he reconstructed from zero by treating cash as a position, patience as a tactic, and confirmation as permission, not decoration. Livermore's perspective on the situation. When I study how Jesse Livermore rebuilt himself after a wipeout, I don't see a man looking for a magic setup. I see an operator reinstalling an operating system. He treated ruin as a systems failure, not a fate. The fix began with his first principle. The market is never wrong. Opinions often are. That sentence is harsh until you realize it's merciful. If the market can't be wrong, I can stop litigating its verdict and start repairing my process. His rebuild started with cash. Not as a pause, but as a position. Flat wasn't the absence of trading. It was the presence of optionality. Being flat meant my future was funded and my perception could reset. He understood that the first capital to disappear after a crash isn't money, it's clarity. Cash bought the space where clarity could regrow. Next came conditions before conclusions. Livermore refused to let a single chart seduce him until the general market revealed its character. He would tag the tape as forgiving, neutral, or ruthless. Forgiving tapes carried small errors. Ruthless tapes punished even good ideas. His size, frequency, and confirmation threshold all derived from that label. This alone prevented him from trying to come back in a market designed to take comebacks apart. Then he recentered on confirmation. Prediction had betrayed him. Proof would guide him. He returned to the choreography that had made him. Scout first, soldiers later. The first unit's job was information, not income. If price reclaimed and held, if pullbacks breathed instead of bleeding, if participation showed up when it should, only then did he add, and only from profits. Adding from profits kept aggression on a leash tied to evidence. It meant expansion came from the market's sponsorship, not from his need to feel restored. He rewrote stops as a contract with reality. A stop lived where the idea died, not where his discomfort quieted. For him, that meant below a reclaimed level that must act as support, beneath the most recent higher low that defines structure, or, crucially, after a time window that a valid move ought to respect. Time stops mattered as much as price stops. If the tape owed him momentum and paid him silence, the idea was stale. He flattened. Stale trades don't just bleed cash. They rot conviction. Livermore also reinterpreted correlation. After ruin, traders diversify into 5 tickers that rhyme. He called that one bet in disguise. He diversified by character, leaders versus laggards, momentum versus mean reversion, cyclicals versus defensives, so a single macro shove couldn't erase a week of careful decision-making. In modern terms, that means mapping exposure by factor, not just symbol. He installed circuit breakers around cognition, not ego. A daily loss limit protected his decision-making before it protected his dollars. When he hit it, he left the room, not in anger and maintenance, He knew the most expensive trades happen after the mind gets small and the world gets loud. Stepping away preserved the only edge that compounds longer than capital, a steady nervous system. Most revealing, he separated identity from method. The tape could disagree with him without insulting him. He didn't treat exits as defeats but as choreography, the move that keeps rhythm intact so he can dance again tomorrow. That emotional neutrality is why his rules sound simple and feel rare. He wasn't trying to win arguments. He was trying to stay available for the handful of campaigns that pay for the year. When I overlay his lens on my modern screen, algos firing, headlines screaming, it becomes even more relevant. Cash is option premium on future clarity. Conditions is the governor on frequency. Confirmation is permission, not decoration. Stops at disproof and time. Ads only from progress. Correlation measured in behavior, not tickers. A daily loss limit that protects the instrument I trade with first. My mind. This perspective doesn't make a comeback dramatic. It makes it repeatable. It turns starting over from a vow into a sequence that any disciplined trader can run. And when that sequence meets the right tape, a single campaign can lift you from repair to momentum. From here, let me take you into a concrete story. How I used Livermore's rebuild logic on a real trade when I was truly starting from zero. The moment a tiny scout, a strict time stop, and ads paid only by progress turned recovery from a hope into a plan. Which part of Livermore's rebuild lens speaks to you most right now? Cash as a position, conditions first, or stops at disproof and time? Tell me below. I'll weave your answers into the next section's example. I began again with an account so small it felt like an apology. I promised myself this time the account would not have to prove I was a trader. My process would. I chose one name, let's call it Harbor Steel, a liquid leader in a strengthening group. I didn't allow myself a basket. 5 tickers would look like productivity but behave like one correlated bet. One name, one plan, one chance to practice the rebuild. For 7 sessions, I watched without touching a key. Harbor Steel had reclaimed its 20-day, then its prior weekly high. Pullbacks were orderly, sponsorship showed on pushes, and the sector ETF kept confirming. I mapped 3 lines: the reclaim level that must act as new support, the structure pivot, last high or low, and a time window. If a valid thrust didn't appear within 90 minutes of entry, I would flatten. Price could be patient. My idea could not. On the 8th morning, it opened soft, dipped toward the reclaim, and then climbed back through with a tone I've learned to respect, impulse without frenzy, bid stepping up, offers getting eaten instead of withdrawn. I sent a scout, so small it felt unserious to my old ego, and exactly the right size to my new one. The stop was not a little lower so it doesn't tag. It sat exactly where the idea would die, under the reclaim plus a small volatility cushion. My note read, if wrong, it's tuition. No speeches. 10 minutes later, the test arrived. Slight undercut, swift reclaim, volume present where it should be, and quiet where it shouldn't. I did not add. Proof before conviction is a rhythm, not a slogan. The first ad came only when a higher low printed above the reclaim and the range shifted upward with volume. That unit was funded by unrealized gains on the scout. The account wasn't donating to my confidence. The market was sponsoring the campaign. I checked correlation. 2 peers climbed with similar character. The sector ETF held firm. Index internals ticked from neutral toward constructive. If those flipped, I would cut exposure even if Harbor Steel looked fine. A single shove against the factor would not be allowed to erase a careful morning. Midday, the chart went still. Old me would have narrated danger and grabbed whatever was on the table. New me watched the clock. My plan gave the campaign 90 minutes to show continuation or I'd strike it. Minute 75, Harbor Steel printed an inside bar, then expanded with participation. That was unit number 3, again paid for by the tape, not by hope. Into the close, I scaled a third to bank campaign profit and trailed the rest below the intraday structure that mattered to the thesis. The final hour tested my resolve, slow bleed, then a late push, then a fade to the trail. I was taken out on the remainder near the bell. No drama, no round trip. The P&L ended green, but the win I wrote down in my journal wasn't dollars. It was sequence, scout first, add from progress, stops at disproof, time stop enforced, correlation policed, review scheduled. 2 days later, Harbor Steel pulled back deeper than I preferred. I didn't chase the memory of the last trade. I waited for the same invitation, reclaim, hold, sponsorship. It arrived. the choreography repeated. The account nudged forward again without stress. Starting over didn't feel like heroism anymore. It felt like a metronome I could finally hear, emotional low point or turning point. The setback didn't come with a dramatic gap down or a headline designed to humble me. It arrived as a quiet decay in judgment, one small exception after another, each wrapped in logic convincing enough to pass as discipline. I noticed it first in my language. The phrases that had kept me safe, disproof, scout, paid ad, time stop, started sharing the page with softer words, wiggle room, likely bounce, temporary shakeout. That was the first crack. The second was speed. I began clicking faster than I was writing. The journal entries shrank while my trade count grew. It wasn't a blow-up. It was erosion. That week, the tape turned ruthless. Failed breakouts, rotational whiplash, leadership thin. My rule for ruthless tapes is simple. Raise the bar, cut attempts, let cash do the talking. Instead, I tried to work the market. I took a clean scout and a former leader, got tagged out at the exact place I promised to respect, and felt heat rise in my chest. The next entry wasn't a scout. It was a statement. I sized like I wanted to feel again. When it went my way for 15 minutes, I read that as vindication instead of variance. When it rolled back over, I felt the old reflex. Add, don't let them shake you. I didn't add, I froze. That freeze was the best decision I made all day. I closed the position for a full, deserved loss, and finally looked at the process score I keep under the P&L. 3 infractions in one session. Traded outside the daily attempt budget. Widened a stop and thought even if I didn't on the ticket, and felt the urge to add to a loser. My step-away protocol triggered automatically. Platform down. Shoes on. Walk. Livermore called this moment losing the sense of the market, but what I felt was losing the sense of myself inside the market. I sat with a notebook and wrote 2 columns, what the tape proved today and what I assumed without proof. The first list was short and sober. Failed follow-through, weak sponsorship on pushes, strong supply at obvious levels. The second list was longer and loud. It's due, they'll reclaim, room to breathe, shake out before run. I recognized the voice, not analysis but nostalgia for the prior week's character. I was trading yesterday's market with today's money. The turn came not from a motivational promise, but from a contractual one. I rewrote my pre-commitments in ink. Attempts, maximum 3 and ruthless tapes. Hit the cap, and I am done. Size recovery size halves by default until 10 qualified trades restore rhythm. Stops, no edits post-entry. Disproof, Karn, structure break, or failed reclaim, paired with a time window that must produce progress. Ads only from realized or locked-in unrealized gains. No confidence ads. Correlation, total risk across a single factor capped at 3R. Baskets of lookalikes count as 1 bet. Cognition, at 2R on the day, step away. Recovery is a tomorrow project. The very next morning, I allowed myself to do what felt like nothing. Watch. 2 potential scouts appeared. Both failed their invite. No hold, no sponsorship. Flat by design, I felt the itch and recognized it as identity pain, not opportunity. By midday, a leader printed a reclaim and hold with volume, then a higher low above level. I put on the scout, felt nothing change in my breathing, and smiled. That neutrality was the sign I'd been waiting for. Not that the market had improved, but that I had. What changed from that low point wasn't my talent. It was my tolerance for boredom and the dignity I granted to restraint. The market did not reward me immediately. It rarely does. But the next losses were tuition-sized, the next gains were paid for by progress, and the fear that I'd slip back into old patterns faded as the journal filled with full sentences again. The turn wasn't luck. It was leisure. The space to let rules act before nerves did. Livermore's lesson that rebuilt me wasn't a strategy. It was a stance, proof before conviction. I had to accept that my opinions don't earn capital. Only the market's behavior does. That single line rewired everything that followed. When I live inside it, my trading calendar looks different, my breathing feels different, and my exits become choreography rather than confession. Here's how the rule actually runs on my desk. I start with a scout, a position so small it serves information, not income. The scout's job is to ask a yes-no question. Will the market sponsor this idea? Sponsorship looks like a reclaim and hold of a level that matters, a pullback that breathes instead of bleeds, a range shift with participation. If the answer is yes, unit number 2 arrives and it is funded by the market's progress, not by my hope. If the answer is no, the scout dies cheaply at disproof, the price at which the thesis is wrong, or at the time boundary after which a valid setup should have shown its hand. I no longer argue with either verdict. Never average a loser stops being a moral rule and becomes a logical corollary. If conviction must trail proof, then adding to disproof is nonsense. Averaging down is the moment I elevate ego above evidence. I refuse it because I want a scalable craft more than I want to be the hero of a comeback scene. The same corollary governs my stops. I place them where the idea dies, not where my discomfort quiets, beneath the structure pivot in a trend, below a reclaimed level that must act as support, or at a time window that a momentum trade must respect. A stop there is not punishment. It's a handshake with reality that buys me the only asset that compounds longer than money, clarity. Enforcing the time stop ended an entire category of suffering, hostage trades that rot confidence while they drift sideways. Pyramiding also changes flavor under this rule. I don't add because I'm excited. I add because the tape has advanced. The proof, a second range shift, leadership confirmation, expanding participation. And I add only when the prior units put me in a position where the market pays for the extra risk. That's how greed becomes a scaling policy instead of a personality trait. Proof before conviction also protects me from correlation traps. 5. Names moving on the same factor isn't 5 proofs. It's 1. I count bets by character, beta, sector, theme, so I know when I'm secretly leveraged to one shove. And when correlation tightens, I reduce the basket as a whole. I don't hide behind the illusion of diversification. The rule even decides when I stop for the day. A daily loss limit at 2R is my cognitive circuit breaker. Once it trips, I'm flat and gone. Not because I'm weak, but because after that point my brain wants redemption more than information. Livermore left the room. I closed the platform. Tomorrow deserves a healthy operator. Most importantly, proof before conviction lets winners breathe without turning me reckless. I protect the staying by perfecting the stopping. I can sit tight in a correct campaign precisely because I accepted small mechanical losses earlier. The rhythm feels almost boring. Tests, paid ads, measured scales, no round trips. Boring is what consistency looks like from the inside. This is the lesson that made starting over sustainable. It narrowed my activity and widened my aggression at exactly the right moments. When the market confirms I don't feel brave, I feel inevitable because the decision was already made by the rules I wrote while calm. How it applies to modern traders. I sit at a desk that moves faster than anything Livermore ever saw. Quotes flicker in microseconds, headlines hit in bursts, and the dopamine loop of notifications tries to impersonate opportunity all day long. Yet the mechanics of my edge are older than the silicon. I still have to convert emotion into structure and let proof lead conviction. The difference now is that I build these choices into my tools so they execute even when my nerves want to improvise. Before the open, I tag the regime. I'm not guessing mood, I'm measuring context. Breadth, volatility, leadership, and factor correlation tell me whether the tape is forgiving, neutral, or ruthless. That single label dictates everything: attempt count, confirmation threshold, and default size. Forgiving, more trials, normal thresholds. Ruthless, fewer trials, higher thresholds, and a bias toward observation. This prevents me from working harder in conditions where work is just churn. I translate scout before soldiers into order architecture. My first entry is a tiny probe, an OCO, one cancels other bracket, with a stop at disproof and a first target that logs partial profit, or at least locks the risk move to break even only after structure advances. If the tape sponsors the idea, reclaim and hold, sponsored pullback, range shift with participation, I add from profits using a second bracket. The platform enforces the hierarchy. I can't add unless the first unit is in profit, and the add would keep total risk within my per trade cap. Greed becomes a policy, not a feeling. Time stops are code, not hope. Momentum setups carry a countdown. If the thesis expects progress within n bars and it doesn't appear, the ticket flattens without a debate between my ego and the chart. This single automation eliminated the hostage trade, the sideways drain that rots confidence faster than red numbers. Correlation is mapped, not guessed. My blotter shows factor exposure, beta, sector, and theme, so 5 similar names can't pretend to be diversification. I cap total R per factor. When the index shoves, I reduce the basket, not a single line, because risk arrived as a wave, not a raindrop. Livermore diversified by character. I enforce it with dashboards. The daily loss limit lives on the broker side, not in my willpower. At 2R, the platform refuses new risk. Screens off, journal on. My next profitable day starts there, protecting cognition before capital. Drawdown recovery has its own rule set. Half size until 10 fully qualified trades restore rhythm. No parameter tweaks until a fixed trial count completes. That separation between variance and failure keeps me from rebuilding the airplane mid-flight. Modern distractions require modern guardrails. I mute news flow during execution windows and read summaries on a schedule. I chunk the day into roles. Analyst mode, scan, plan, tag regime. Operator mode, execute only what's pre-written. And auditor mode, score process separate from P&L. If I catch myself mixing roles, editing rules while in a trade, or hunting new ideas when I should be managing existing risk, that's a yellow card, and I step back. Sizing is volatility aware, but still simple. I use ATR or true range bands. To place stops at disproof, size the scout to a fixed fraction of risk, and let the market decide whether I deserve unit number 2 and unit number 3. Winners are not allowed to become teachers. If a campaign gives back the entire paid move, I scale down without narrative. The logic is unemotional. Progress funds aggression. Regression funds humility. I keep a 2-column journal that Livermore would recognize instantly. What the tape proved today versus what I assumed without proof. That single page exposes my most expensive habits. I also score process, 0 to 5, even on green days. A sloppy win is a red flag. A clean loss is tuition. Reviewing that grid on weekends turns scattered experiences into a coherent craft. When I apply all of this, starting over stops being dramatic and becomes repeatable. I arrive each day with a regime tag, a capped risk budget, pre-written disproof and time windows, scaling rules that only unlock when the tape pays, and circuit breakers that protect the operator from the operator. The technology makes it faster. The Livermore stance makes it sane. I keep the entire rebuild on one page so I can execute it even on my worst day. It's a sequence, not a slogan, and each step unlocks the next only when the market pays for it. 1. Regime tag, pre-open, 5 minutes. I classify the tape as forgiving, neutral, ruthless using 4 checks. Index breadth, volatility, ATR versus 20-day average, leadership quality, are the same names carrying, and factor correlation, are groups moving as one. Forgiving were normal attempt count and thresholds. Neutral, fewer attempts, slightly higher thresholds. Ruthless, calm observation bias, higher confirmation bar, default half size. If I can't label it, I treat it as ruthless. Risk budget and circuit breakers. Per trade risk, 0.25% to 0.5% equity, 1R. Daily loss limit, more 2R, platform enforced. New orders blocked. Weekly draw cap, 6R. If hit, I trade half size until 10 fully qualified trades reset rhythm. The goal is to protect cognition before capital. 3. Setup card, written, not remembered. For each strategy I pre-write, entry behavior, disproof, time window, and add criteria. Example, reclaim continuation. Entry, reclaim and hold of prior high plus sponsored pullback. Disproof, below the reclaimed level plus volatility cushion, or below last higher low. Time stop, if no fresh high within N bars, March minutes, flatten. Add only on range shift or retest and go with participation. 4. Scout soldiers. First unit, Scout, risks 0.5 R to ask a yes/no question. Is the idea sponsored? If yes, hold above level, higher low, real volume. I add unit number 2 funded by unrealized gain. If progress advances again, second range shift, leadership confirmation. Unit number 3 unlocks. No ad from hope. Ads are paid by the tape. 5. Stops that measure information, not pain. Stops live where the idea dies. Structure break, failed reclaim, or expiry of the time window. I don't move them post-entry. If momentum setups stall past the window, I flatten even if price hasn't tagged the level. This prevents hostage trades. South correlation budget, hidden leverage control. Exposure is capped by factor, not ticker symbols. Total open risk per factor theme. 3R, 5 names in one theme count as one bet. Baskets reduce as a whole when the index shoves. 7 attempt count and drift guardrails. Daily attempts are pre-declared, e.g. 3 in ruthless, 4 in neutral, 5 in forgiving. Exceeding the count ends new risk for the day. System tweaks only after X qualified trades, e.g. 30 under the same regime. Variance is not a mandate to modify. 8 hold and exit logic. At plus 2R or first measured extension, I lock some profit or raise the stop under meaningful structure. Winners are not allowed to become teachers. If a campaign gives back the entire paid move, I scale down without narrative. Exits are choreography, partials on extension, trail under structure, flat on disproof or time. 9 journal and score, 10 minutes. 2 columns, what the tape proved versus what I assumed without proof. I score process 0.5 separate from P&L. A sloppy green day is a warning. A clean red day is tuition. 10 reset ritual. Hit 2R or feel rising improvisation. Screens off, walk, water, breathwork, review. Recovery trades default to half size until 10 clean executions restore rhythm. Run in order, this turns caution into a launch pad and ambition into a scaling policy. The next section ties the sequence back to identity, a closing reminder that starting over isn't about drama. It's about a daily metronome that makes your best behavior the path of least resistance. Cinematic conclusion plus emotional sign-off. When I think of starting over, I no longer picture a dramatic bell ringing or a sudden redemption trade that erases the past. I picture a quiet desk, a clean page, and rules that read like music. The market will always be louder than I am, but it never has to be wiser. That is the lesson Jesse Livermore left in the margins of his life. Recoveries are not built from willpower. They're built from sequence. Sequence survives fear. Sequence ignores applause. Sequence outlives luck. I didn't rebuild by promising to be brave. I rebuilt by promising to be honest, to put the stop where the idea dies, not where my discomfort fades. To send a scout first and let the market pay for my ambition. To accept time as a variable and end hostage trades with a clean exit. To cap a day at 2R, so my mind remains an asset rather than a hazard. I relearned that cash isn't empty. Cash is optional. It funds patience, which funds clarity, which funds size at exactly the right moment. If a campaign deserves me, it proves it. If it doesn't, I'm small, quick, and shameless about being wrong. I also learned to treat identity as inventory. I'm not a bull or a bear, I'm a reader of behavior. If the tape confirms, I listen longer. If it contradicts, I step back and let silence do its work. That posture is how a trader survives both the fast win and the slow loss. It's how a good week doesn't make me reckless and a bad week doesn't make me superstitious. Process is my biography now. P&L is just punctuation. There is a moment, late in the session, when a position breathes the way it should and the nervous system stays quiet. That calm used to feel suspicious, as if I were missing urgency. Now it feels like alignment. The rules are carrying me instead of me carrying them. I don't stall at exits because the choreography is pre-written. I don't rush entries because the invitation isn't here yet. The market offers movement every minute. It offers meaning a few times a day. My job is to be solvent, centered, and ready when meaning appears. If you've lost everything, understand this. You didn't lose the ability to trade. You lost the conditions under which you trade well. Rebuild those conditions, and your edge returns as quietly as it left. Tag the regime. Define disproof. Pair price with time. Police correlation. Add only from progress. Protect cognition with circuit breakers. Journal the difference between what the tape proved and what you assumed without proof. Do this without theater, and you'll notice that starting over stops feeling like penance and starts feeling like craft. I shut down the desk the same way now. I score process beside the P&L, sign under a single line, proof before conviction, and let the room go still. Tomorrow we'll write another tape. I don't need to predict it. I need to arrive with rules that make my best self the path of least resistance. That's how Livermore began again. That's how I begin every day.